Hi, this is Randy Finney with Right Side of the Chart, and this is an early session or really mid-session update now for Thursday, February 23rd, 2023. It is 12:20 p.m. Eastern Time as I'm starting the video, and I'm getting this one out in the heels of the update I just posted regarding the reversing, covering this morning's short, and going long at the trendline support on SPY or ES actually, and SPY. All right, so I'm going to get that out, and the reason I want to do a video, again, this bears repeating. I say the same thing a lot of times, but I know some people are on the site all the time, actively trading, others aren't. I'm wearing multiple hats and speaking to, providing analysis on different time frames. Swing and trend traders, we have some pretty good sell signals recently. Those sell signals are very much intact. Those sell signals also very much have the potential to really be the start of the next leg down in a bear market. And what that means is maybe a lot more downside to come in the coming weeks to months. We'll see. And so, when I post 15-minute charts, 60-minute charts, things like that, and I talk about bounce trades, a bounce trade is just like it sounds. It's a bounce off support, sometimes 1% or 2%. Sometimes a little more, sometimes even a little less. Depends on how you trade. If you're an active trader and you're day trading, you're gaming intraday charts, a 0.5% bounce, your broker will give you enough margin, buying power to hang yourself if you want. You open an account at a brokerage firm, whatever your number is, whether it's typically you should have a substantial amount of capital. If you're trading, if you know what you're doing, I don't have to tell you this, but if you've got 100,000, $1,000,000, anywhere in between, you can buy enough NQ or ES, factoring in the leverage that you can make a lot of money by gaming a 0.5% bounce on or 1-2% bounce on NQ. So again, if it's not your cup of tea, not your wheelhouse, not your area of expertise, don't do it. Don't try it. You will not follow. This is not a follow me site. You can't possibly follow a day trader. I think that's virtually impossible. But I lay out these levels in advance, and again, take them if you want. You can also there's all types of hybrids, if you will, from active trader to swing trader to trend trader, and I'm just telling you what I'm doing and what, most importantly, what I think the markets are going to be conducive to. I've warned and still maintain about the likelihood of a best case scenario in the stock market. I started talking about it back here, that we'd have virtually no upside. The upside was very limited. The risk reward was skewed to the downside, but there was a good chance we're going to grind around for a while and digest the gains. I'm talking about digesting the gains from this rally. Then we call it the New Year's rally, whatever you want to call it. The Nasdaq went up 20%. A lot of individual stocks, especially the big fangs, did a lot more than that. And you get overbought, and especially in a bear market, again, it's I even threw out a suggestion or an idea to sell covered calls if you were bullish. If you want to own and keep those stocks, Amazons and Apples or whatever then you would have been generating income by selling those calls, which have now, in most cases, expired worthless. So you keep the premium on that, and it offset any givebacks on your stock. So that would have been a good strategy. Obviously, it would have worked out so far. And here's the thing: we may continue to grind around. So let me just get to the point here. We are at, once again, key support. Now this is day 3. Remember this area here, this line about 294. 294.20 is where it's written, highlighted on my chart, the yellow line. That was the bottom on most likely bounce target zone. It was there for all the way back here. It's resistance, it was support back here, it was resistance here, it was support here. It's just a big level. And so I can and did make the case to be short for swing positions recently with the sell signals we're looking for, primarily the breaks of these uptrend lines and negative divergences, and everything else that we had on various time frames and different indexes. But again, we're at support. Now, support is support until unless broken. So you have not just the price support, you also have the 200-day exponential moving average being back tested. You have the 200 simple just below it. So there's a lot of support. And I just think that we'll probably continue to grind for a while. Maybe we take them out and then I reposition. I'll close out the longs. I just got out to you, reversing, uh, and I'll decide what to do there. I have both swing and in short-term positions now, but that's it. We're at support. Um, and on QQQ, and also let me show you SPY here. You also have SPY that's that primary trend line support. That's a big level, very big level. This is the bear market uptrend line that comes off the bear market lows. So far the lows of the bear market back in mid-October, and it's well defined. And we're right there right now. This is where the buyers, quote unquote, should step in. If they're going to take it up, if we're going to get another bounce, which is all I'm trying to game right now, still open to the possibility of that marginal new high scenario. But again, I'm not looking out that far right now, at least not positioning wise. It's just, I don't want this to come across the wrong way. It's just too easy to make money and sidestep these givebacks. So the indexes are conducive to short-term trading now when you get in these ranges. So I'm going to continue to ride out. Let me put that downtrend line there. That's also another potential target. There's a downtrend line off the highs. So that's it. We're at not just price support. You have trend line support. You have the 200-day moving averages. There's a whole lot right out there right now for longs or bulls, even if you're longer term bullish, to be stepping in and buying the markets here. And again, with a stop below, you might say, Randy, why would I buy it? You think it's going down? Well, first of all, I don't know what it's going to do. I told you where I think it's ultimately going to go down. But the only guarantee I've ever given anybody on this site is that I will be wrong, and I'll be wrong a lot. So what I do is provide analysis. I provide objective levels where you can either as a bull buy pullbacks to support and get into positions, or as a bear wait for a break of those support levels to short. And then you guys decide what to do. So there it is. We're at support now. The 60-minute chart. We're at the same trend line. Remember, we hit this. So this is micro trading, what I call. Let me go back to that chart I got out to you today. So on Friday, this was Friday, I gave you ES right here. Said a sell signal was triggered on the break of that minor trend line. Showed you a little kickback, and then going down here, right? And that was on Friday. And let me show you ES right now. That was right here. There was that almost exactly what was predicted in that scenario, a little kickback rally, and then move to exactly what we just hit. If you recall the other day, so that in itself right there, here's the measured target. That's 2.76, almost 3% right there, right? The line, that's my measuring tool. So that was good. If you just took that, you made 3%, which in less than a week. Do that week after week. If you do that next week and the following week, you're talking 12% for the month. You're talking, I'm not annualizing or anything here, just simple math, non-compounding. That's 144% a year. Not that you're always going to do that. You're going to have losers in there. But I also mentioned right here the other day, that's where I mentioned covering, objective level, expected to bounce, because at that very same moment, I gave you a chart on SPY. That was yesterday morning. Was it yesterday morning? Wednesday. Yeah, yesterday. We were there, and in pre-market, you don't see it here. That's that same uptrend line right there, a bit more on a 60-minute chart. And so that was where it was, highlighted as an objective long entry. And that was on SPY. Let me go here to my measuring tool. I'm going to have to turn off everything and then just measure up. That was good for a 1.5% bounce. So now you take the, cover there, you get your 3%, whatever it was, you made another 1.5. And then this morning I got out to you before the market opened that we were at resistance and probably a pullback likely at my first targets, and then so there's another it was 2% on QQQ, and so then you add all that up. Now you're talking in just the last week, closer to 6%. That's the world of an active trader. They don't always all work out this well, but these are the little what I call micro squiggles, zigs and zags. Now bigger picture, okay. Again, you don't have the time, the inclination, you work another job, or you just don't want to be in front of the computer all day, which it is a full-time thing if you're going to actively trade like that. You need to be completely engaged in the market with a monitor with a lot of charts, watching multiple indexes, because you want to see ideally not just SPY, but you want to see QQQ also pull back to support, which it did as well right here. It keeps holding the support. Now, another thing to note is what happens is support is support until unless broken. Sooner or later, this level is going to give way. I have it about 292.92, so just under 293. And there was the first bounce. That was a tradable bounce. Well, that's the one we got yesterday. Back down, we shorted, or at least I said, you can reverse, drew a little arrow, expecting to pull back today. The arrows, sometimes I'll draw them if they're target. Sometimes I'm just showing you where the reversal points are. And that's just a very logical place. And a lot of times I'll even take those reversals, and then quite often then I kind of sharpen my pencil and put together, watch price action, determine exactly where my target's going to be. Now here's the thing. We're at a pretty key level. We're at on this short-term chart here, the 60-minute chart, we're at support, which you can see has been being knocked on for the last few days. Look how many candles there. So if it goes, and it goes with conviction, what does that mean? Not just a little brief dip and a pop back above, but a solid move, especially a solid 60-minute candlestick close. Even better on the daily time frame, you want to see a daily close. And then what will happen is that level here, there's my more simple board, but this is the board I've been working off. That 294 level goes, it means the 200-day moving average is gone. Then we'll probably come in and test this 200 simple and maybe that downtrend line right there. And then if we go much lower as well, then you also have broken this uptrend line. This uptrend line, we've already had a reaction because we hit it yesterday and bounced, and we're there again. So that's it. I think we'll probably get another bounce, and I'm going to move this level right here right now and show you, a likely target somewhere around here, about 405 or so. And we could easily carry, if we do, carry up here to the downtrend line. All I can tell you is this is pretty good resistance right here, and it's a target I laid out the other day for a bounce off here, and we still may get there, and that would be right around, well, I'd put a higher weighting. Forget about that 411. That level's been traded through. I'm going to take that line off that chart on SPY. I just look at the downtrend line right there, and that's it. So this is what I favor. A little near-term upside now. Game this bounce. But as I said yesterday, I view it as a picking up nickels in front of a steamroller type trade, because we have the divergences, you have the overbought readings, you have the recent bearish PPO crossover. So we had multiple sell signals and confirmation on the indexes recently. Same thing on QQQ. Remember, there's that bearish PPO cross. It looked like it was going to come. And I said it was imminent. It looked imminent. It appeared imminent, and we were going to get it sooner or later. And it got delayed a few days, and then boom, you got it right there. And that's also on the heels of overbought reading and the breakdown and back test. The only reason I'm not aggressively short right now is, again, there's just this whole thing here is a breakout on QQQ and SPY. They're breakouts. You can't ignore that and just dismiss it because you want it to fit your narrative of where the market must go. I will respect this breakout right here until and unless it fails. I think it will fail, but right now, and this is a clean board, there's the primary downtrend line in SPY, the bear market downtrend line, super well defined. There's your breakout, and at this point, all this is a breakout and a back test, and there's a confluence of support right here on SPY. Major support. You have the primary bear market uptrend line, which I covered, the primary bear market downtrend line. That's the apex of those two right there at the triangle. You're back testing that, and the 200-day simple and exponential moving averages are right in there. So again, on a scale of 1 to 10, support, that's a 10. And so what I mean by that statement, it doesn't guarantee it's going to hold. I can just tell you on 1 to 10, it's a 10 for support. Very good, not just one, but multiple key levels. And so what that also means is, the buyers should, and that's in quotations, I'm doing little quote things with my fingers, buyers should step in here now and rally it off that level and take it on up. But if they fail to, because it is significant support, that's going to be very bearish. And, it's not we'll start with a solid move back below there, especially a solid daily close. And basically, the farther you get away from it, the higher the odds go. It's just like I always talk about, horse betting. Up to the betting closes, the odds are constantly changing on the board. Same thing. So the odds are going to increase the further you get away from there, because it's going to become clearer and clearer to the masses that this breakout has failed, if that's indeed what it does. But until and unless that happens, this is just, not include yesterday, but we didn't bounce much. And basically the first back test, we're just back testing all those levels. So that's why I'm, as of this morning, no, I'm sorry, as of the start of the video, long and strong. Came in the morning, gosh, this makes my head spin. Came in the morning short, covered that, traded the bounce. No, came in long, I'm sorry, from yesterday. Yes, yesterday long, sold that, shorted, and then covered. And so now long. All right, that's that. Oh, and then old Mr. VIX here. Let's not forget the VIX Volatility Index has made a clear breakout. We were watching this downtrend line forever and a day. And then we recently broke out, back tested. We've been moving higher. As I mentioned, you usually get these little, sometimes it will just rocket on up, but usually right after the breakout, there's some back and forth. And then you get that big surge up. So this big surge could be coming soon. And what it will coincide with, as I said before, if we get it, it's going to coincide with a break of those support levels that I've just spent the first 12 minutes or so in this video talking about, on major support, price support, 200-day moving averages, trendline support, everything on the indexes. So that is a and if I could tell you with absolute conviction or certainty, I would be glad to, but I can't. All I can tell you is that's, if it happens, and you start to see those indexes break down, and you see the VIX doing this, that's what's going to happen. That's saying that we're probably now still into the early stages. Not when we get up here, but when we start getting up here. If you start to see the VIX consolidate for a bit, so that's my plan. Game this bounce long. But I'm driving with one foot on the gas pedal, one on the brake, ready to stop out and reverse, and get rid of those longs if need be. So I'm just looking at game bounce now. Anyways, that's it. So like I said, a lot there in the charts, and if I had to do one or the other, let's say go put everything long or short the indexes and lock away the key for the next couple months, I'd probably do it. I'd most likely do it on the short side, but the good thing about that is I don't have to. Nobody has a gun to my head, so therefore I'm going to wait and more react. I'd rather get back into or add some swing shorts on a bounce into resistance, and that would be anywhere from, this would be ideal, anywhere from this trend line right here on SPY or up to that marginal new high scenario. And this is really a max bounce target as well. Remember, this is a major reaction high right here on the S&P 500, and you have something similar on QQQ, which is the top of my max potential bounce target zone right there. That was that major reaction high back there as well from August in QQQ. And so that is to me the absolute I shouldn't say absolute, but the most bullish bearish scenario that still keeps the bear market alive and well and just not all muddled up. I mean, I talked about this before. You can, let me turn off all these lines. Technically speaking, this was the high. You could do this, come all the way up there and fail a little shy of that, and then go on down and take out the previous lows. And guess what? That's still a bear market, because that was the high. You never took it out. So anything's possible. I'm speaking in the realm of probable is what I just talk about. Probabilities, not possibilities, being that nearly anything's possible. And so that's it. So I'd put pretty low odds, very low odds that we take that out. Anything above that, pretty low odds we're going to get that far. Like I said, right now it's a matter, we're going to get this rally up here, marginal new high. It would really be nice, it would really mesh well and get me confident to put on a heavy short position if we got there, because that would give us some nice negative divergences on the daily time frames here. It would blow out a lot of short interest, completely flip over the, I don't know, haven't looked at the sentiment readings lately. Um, I know they were getting pretty darn frothy here, pretty bullish there, and you get a little pullback like that and ramps up bearishness. But if you got a thrust up now in the next few weeks here, and the market rallied, let's say QQQ rallied from where we're at right now, let's just play that marginal and high scenario, say if they're about 317 or so, that would be about a 7-8% rally. Oof, oh yeah, you'd have blow out a lot of weak-handed shorts, suck in a lot of longs. They'd be declaring the bull market, the bear market. Those that haven't already declared it over would be declaring the bear market over, start of a new bull market, and that would just be a beautiful scenario to see the bottom fall out for the next big leg down. So we don't always get what we want, and that's why I'm going to take it day by day. You know, watching these intraday charts and trying to gain the little micro bounces, because one thing I've learned many years ago and I've gotten much better at is learning to sidestep or effectively trade. Either stand aside, sometimes I'll take it off, the time off, or hard to do with the site, because you know, people come in and they're going to want, you know, hey, what's going on today, or find something else if you're not trading the market, and that's what I try to do, find other securities to trade. But in those, if you're going to trade the market, there is money to be made actively trading, not swing trading. Swing traders are getting frustrated because we're trading right now today where we were back at the end of January here, and you can see again we've gone up and down in this range in the box, my most likely bounce target zone. So that is it. I don't want to spend any more time on that. I will wrap it up here. I'll do a quick update on natural gas because there was so much interest in that yesterday. Rallied right up to resistance. Remember, we've rolled now into this is the March contract, which I think stops trading today. I rolled over into the Aprils. Let me grab that chart. Got it here somewhere. Bear with me. NG. Nope, that's still the March. Oh, right next to it. There it is. This was zoomed in. That's just yesterday trade. We rallied right up. That was pretty good resistance here. This is just a 15-minute chart. I have it at 2.293. There was that was these previous reaction highs right here. We hit it yesterday, had a little pullback, and we rallied right up to it. This is a level we should pop that. Looks like a little inverse head and shoulders there with a left shoulder, head, right shoulder. Pop that. The first resistance, and it's pretty good resistance too, is at 2,363. If we can pop that, which I think if we pop this to 293 level, you know, we'll probably take out this, even if we have very little, if any, reaction. So those are your levels. And then on this 15-minute chart, if we take out that 236 level, I don't see it slowing down to 261 right there. Go to the 60-minute chart and see what I have there. See, I had on the March, I had a better resistance level. Remember, they're going to have different prices on your different months here. Again, the Marches aren't trading now. If they're trading at all, today would be the last day, I think. You can see right there, 3-month. Nope, wrong chart. That's NQ. Where'd I go? Back to my NG. All right, NG. There's the March. Oh, here's what I wanted to do. Let me pull that one up. I'm having a really hard time with this. Okay, I can see now I was cut off. The chart was cut off a little bit on the screen. I didn't have it centered to the screen capture. My apologies for this. I really kind of just wasn't planning to cover natural gas. It just kind of hit me before I wrapped up the equity market video. There it is. This is what I want to show you. Okay, this is the current contract to be trading, the April's. Okay, somewhere in here, I realized I hit the pause button in the last couple minutes, and I don't know where that was, so I'm picking it up. I'm just going to recap what I did because I don't know how much I covered in NG natural gas futures. I was showing you a 15-minute chart, I believe, that showed you these levels here, right about here. It's pretty good resistance, about 241. 242 on the April contract, which is now trading. That needs to pop, but when you go to this 15-minute chart, and I think it will, showed you a little, looks like a little inverse head and shoulders, left shoulder, head, right shoulder. neckline right there. And so about 244. So today's highs, that's where we also pulled back yesterday. We popped that. It should be a quick run up and about 11-12% rip up to the 270 level right there. And then if that goes, that is that big level I was showing you on NG. On NG, I mentioned recently we had the breakout, a buy signal on the breakout above the downtrend line, which we're still well above the downtrend line. We also had a confirmation or confirming signal on a bullish PPO crossover, which is still very much intact. There's a PPO histogram still green, and so just as with before, we had this level of consolidation here. The breakouts kept us in that range. We need to pop that 891 level, and that would coincide with that level I just showed you on NG, which again is it's the March, it was the April contract, that 270 on the April contracts of natural gas futures. So that would be both a initial minimum swing target, if, again, pending a break above this 244-ish level right here. And then if that gets taken out, that would then most likely open the door to these targets I laid out from back here, and that's T1, T2, and T3 right there, $10.20, $11, and $11.80-ish right there. Alrighty, let me wrap it up here. Apologize for that snafu. Hopefully you got most of what I was trying to cover on natural gas. And I believe I don't think I hit that pause button until after I finished everything on the equity markets. Either way, I'm going to get the video out to you. This has been Randy Finney with Right Side of the Chart. Have a great day.